Banks and fintech companies that don't have a physical presence, either in the Middle East or Asia, often don't think a lot about how North Korea and Iran do their illegal banking transactions. But recently, the United States has brought several huge cases against financial institutions and individuals who are processing illegal transactions on behalf of North Korea and Iran. And what these cases show is that a lot of financial institutions, both in the United States and outside, have been processing transactions that are illegal on behalf of North Korea or Iran, often without even knowing about it. In fact, just 2 weeks ago, the Department of Justice brought a case charging 33 different individuals with a global scheme that operated in 6 different countries in Europe, in Asia, and North America for processing transactions on behalf of sanctioned countries. And so today I want to talk about the nature of these cases that have been brought by the Department of Justice and the risk that this poses to financial institutions, often who process these transactions without even knowing about it. And last, I'm going to talk about what banks and fintech companies should do to avoid the potentially massive liability for processing transactions on behalf of sanctioned countries, entities, or individuals. So we actually don't know how many cases the US government has filed so far. And in fact, the case that was just made public 2 weeks ago actually was filed 4 months ago. But it was filed under seal, which meant there was no way for the public to know that the indictment had been brought. But when we look at that indictment that's now been made public, it shows that there were 28 North Koreans and 5 Chinese who allegedly conspired to process over $2.5 billion in illegal transactions. And allegedly, the transactions were done on behalf of a North Korean bank through what were described as covert branches of this bank in Libya, Austria, Russia, Kuwait, and China. And the tactics that were used by these individuals included creating over 250 fake companies located all over the globe, opening accounts in the name of these companies. When those accounts were identified, either by the bank or by a government, they would then repeatedly create new companies and open new accounts. And finally, when the bank asked for documents, they would often provide documents that contained falsified information, such as contracts that listed incorrect participants in the transaction, to make it even more difficult for the banks to identify what the true source of the funds was. These global schemes to process transactions on behalf of North Korea and Iran create a huge potential liability for banks and fintech companies. And that's because it's not just illegal to process transactions intentionally on behalf of North Korea or Iran, but it also can be unlawful to unknowingly process transactions on behalf of these sanctioned countries or individuals or entities because you don't have an adequate anti-money laundering program. For example, earlier this year, the Department of Justice brought a case against the Industrial Bank of Korea, and the case charged that they willfully failed to have an adequate anti-money laundering program and therefore processed transactions on behalf of entities that were on the US sanctions list. And that distinction is critical. They didn't admit and they weren't charged with intentionally or even willfully failing to stop the transactions from happening. They were charged with willfully failing to have a good enough anti-money laundering program to even detect that those transactions were happening. And so clearly, given that there's this global network of companies with fake names, with fake documentation that are applying to do transactions through banks, and whenever they're identified, they shift to a new company and use new fake documentation, there's a real risk that a fintech company or a bank could process transactions on behalf of an entity that is on the sanctions list. And if you do that, you're then in the unenviable position of trying to argue to the US government that you have an adequate anti-money laundering program, even though the program didn't identify that the transactions were unlawful. And that's not a good position to be in. Potentially, you could face massive fines, such as the $86 million fine that was ultimately paid by the Industrial Bank of Korea, and you don't want to be in that position. So what can you do to avoid it? there are a number of things that banks and fintech companies should do to make sure that down the line they don't face liability for processing transactions unknowingly on behalf of sanctioned individuals or entities. So first, you just want to make sure your employees know about OFAC sanctions. Second, it's important to have a policy on how you are going to be preventing any transactions on behalf of sanctioned individuals or entities from going through your institution. Third, you need to have procedures that detail how that policy will be implemented. Fourth, you need to have formalized training for individuals that both informs them about any updates that have occurred to the law or the application of the law that applies to sanctions, and you need to document that so that down the line you can show any regulator or criminal prosecutor who asks that you in fact did the training. Fifth, you want to make sure that your board is involved, both in the implementation of the policy, the procedures, and the training. And sixth, you want to monitor not just your domestic operations, but your international operations, because we've seen a number of U.S. entities pay fines or otherwise face sanctions because their international branches or their home office located outside the United States participated in unlawful transactions. And finally, it's important, and this is particularly relevant in the fintech space, it's important to monitor not just your own sanctions policies and procedures, but the policies and procedures of any third party that you rely on. So if you're a bank and you rely on a fintech company to get information on behalf of an account holder, you need to make sure that that third party has an adequate sanctions policy and adequate procedures. Similarly, if you're a fintech company and you process transactions and you rely on some third party to provide you with information about that account holder or the nature of their business, you need to make sure that they have adequate policies and procedures that you can rely on. And this can be very difficult because the law and the government's interpretation of the law is continuously changing. And in addition, the activities that have been taking place that Iran and North Korea have been doing have actually changed over time. For example, we've seen an increase in transactions that potentially involve cryptocurrency. And so now financial institutions are having to monitor for example, specific cryptocurrency or Bitcoin addresses. And many of them didn't even have the computer ability to do that within their network. So they had to figure out how to implement that. So it's important for you to consult with counsel about these legal developments. And good news, I'm a lawyer. So if you do want to ask any questions about your policies and procedures and whether they're likely to survive scrutiny down the line, give me a call. I'd be happy to talk to you about it.